So, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, sometime in early September, November the 5th, 2022. Good to see you all here. How many of you made good trades last week? It was so easy, right? It was a piece of cake. We had really good volatility both to the up and the downside with not only earnings release, jobs report, the FOMC. Next week, we've got the election, right? Coming up Tuesday. So lots of volatility ahead in the markets. And let me ask you guys, let me start by asking a quick question. How many of you think this might be a good idea for me to show you the money? On the count of three, everybody say, show me the money. 1, 2, 3. Show me the money. So how about P&L proof of my most profitable trade of the week every Saturday? I think that would be, or sequence of trades in this case. I think this is a probably good thing to establish credibility and value add, and why should you listen to me in the first place? Because I actually make real trades, of course, but also to teach you maybe lessons learned from a real money trade that worked out. Do you think that might be good? Wow, okay. Big money week for me, show me, yes, 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 of course, yes. Keep it coming, yes. Okay, yes, yes, yes. Thanks, okay. It's scrolling by. Anyway, the easiest way to make money for both swing or day trades is when something keeps freaking going up without chopping around, right? The trick is you don't know when that's going to occur unless you know exactly what patterns to look for. That pattern emerged for my traders yesterday, and I made a buku bucks trading UVXY on this whole run up. I was in over 2,200 shares, I think, just over 2,000 shares riding this puppy all the way up. And here's P&L proof from just some of my executions from my Fidelity account yesterday. You can see I was selling this thing all the way up, making lots of money. Now, I like making money. It's what I do. I want to teach you guys what I've learned over the last 22 years in day and swing trading. I prefer day trading because I like to not have overnight gap risk for the most part. But one reason too why I like ETFs, because they can only gap it so much, right, compared to stocks for risk management. Anyway, most profitable trade of the week was what I call an unbroken runner. And that's where I put in a leg into, or layer into, a sequence of, in this case, I think it was 6 trades on the way up, 400 and 500 shares at a clip. So I was in well over 2,000 shares and selling it up. I didn't sell the exact top, but close enough to make a lot of money. An unbroken runner is a very valuable strategy. And there's a specific way to look for how to trade that pattern. Now, I don't have time to cover that in today's brief presentation, and besides, I choose not to. But if you're a live room member, we'll be going over these as we always do, and other patterns for exclusively my subscribers in the live room. So this is an unbroken runner, P&L proof. It worked. I made a lot of money with it yesterday. I'm in a good mood, and I hope you guys are too. So that's, and I'm going to come up with new pattern names too, so that they're memorable, not basic, cup and handle breakouts, but some proprietary, unique, clever names that are easy to remember. So an unbroken runner, that's one where it's unbroken by major pullbacks and a ran, so that I could scale in over the course of, it was like an hour or so, 40 minutes. Made a lot of money, over 2,000 shares sold near the top, and nailed it. So anyway, I'll teach you how to do that at trademastery.com live, my live room. And again, P&L proof of what I do. I think that's all I wanted to share. Oh, another thing is, oh, that's it. Yeah, that's good enough. So let's get underway here with today's broadcast. We'll start off with our daily chart with our S&P. Let me open this chart up here so it's easier to see. Now, if you good folks remember, last week I did correctly call the false breakout, right? Remember I said this is a BS rally. It's going to drop and fade. They always do, right? This is yet another bear market rally. People are getting all excited. The market's going to keep going up. I said short this punk, and that's why I went long UVXY and did really well with it. So, and the SQs. I like trading UVXY, SQs, and several others. There's a whole list of them there. Anyway, remember in this broadcast last Saturday, I said I don't think the market's going to keep going, likely running overhead resistance right near the 3,900, and that's exactly where it topped and rolled back down. We have an uncertain Friday, kind of a doji Friday, choppy. It's anybody's guess as to what's going to happen. The election is going to be the next data point that Wall Street pays attention to. So hopefully we'll get a big red wave and the market may rally off of that, or it may continue to sell off. Either way, I'm not going to put on any major swing trades until after the election results are in, because that's going to be a major market moving event. So starting Wednesday, the fireworks will light up, and you really want to pay attention to the VIX, your volatility index, as well as the broad indices like the S&P, the Dow, the NASDAQ, and the Russell. So market's been going up, it rolled over and came back down. So we are now in a corrective downtrend off the previous peak up here, right? Moved up, went down, moved up, went down, moved up, went down, moved up a little down, moved up again, went down a little. It's kind of uncertain right here, right? We don't know where it's going to go. The election will be the deciding factor for the stock market for the near future. Does everybody get that? That's going to be the most important next data point. We've had the FOMC and Powell talk, jibber jabber. We had the jobs report yesterday, our NFP. And I agree, yeah, William. And that's true, yeah. Looks like we can rally for a day or so. Deadlock Congress against the presidency, right? There will be likely lawsuits challenging election results, which will over 39 or 7. Yes, that's exactly correct. Wendy, yeah, smart Wendy. Yeah, she's right. 3,900, 3,700 is the immediate box range. And I'm glad you brought that up. We take a quick look here, you can see. Good point from Trader Wendy. Thanks, it's smart. Thank you for bringing that up. 39 to 3,700 is the key to SR levels right now. So we want to trade outside of those. I think I mentioned that last week too, right? And so thanks. I'll reiterate, 3,700 is key support. 39-ish is key resistance. What that means to you as a trader, at least what that means to me as a trader, is I'll day trade the heck out of the markets. I always do, but I'm not going to do a lot of swing trading until the market breaks one of those support or resistance levels. Now we're going to look at charts. We're going to look at the VIX, and then we'll look at some individual charts. Do you guys have any swing trading charts? Hit me with your best shot, and I'll go ahead and pull those up in just a minute. First, I'm going to pull up the VIX, and then I'll look at some chart picks from me to you, and then we'll look at your guys' charts. And the VIX has been in a very long downtrend. This is not going to last. How many of you think the VIX is going to keep going down for another week or two? I think the VIX is way overdone. I think it is. The VIX almost never goes 3 weeks in a row down. It is long in the tooth overdue for a big ass bounce. So UVXY or other VIX instruments, certainly good candidates. If the VIX gets back over, I'm going to use 27 by 24. 24 is S1, 27 is R1. So if the VIX gets under 24 and keeps going down, then we'll have a bullish market recovery and we can start swing trading long side in regular stocks and ETFs. If, however, the VIX gets over that 27 right there, 27, that's my threshold criteria. Remember I said that next week. You've seen how accurate my calls are. I want you guys to make lots of money. I want to as well for my own accounts. We all want to make lots of money, right? That's why we do this. Anyway, so 27, if the VIX gets over 27, then I'm going to start putting on size in UVXY, SQQQ, and SOXS. Those are my 3 favorites. So anyway, we'll see. The VIX question, how far do I see it going? Well, it always do a spike. It always, volatility, it does a quick run up, then runs back down. So the trick is make a boatload of money with things like UVXY, back in the old days, VXX and TVIX, during the spike up, and then sell the rollover after a spike. And I teach how to do that in the live room. So for all of your live room members, I've got you covered. Speaking of which, before we continue on, just a reminder here before I forget. Tomorrow's the last day because we're already in November. You can get access for the entire rest of the month of November with me for just $97. And there's no subscription attached to it. And I give you money back guarantee. So 0 risk. Why not, right? Why not? It's only $97 and I'll give it back to you if you don't think it's a great deal. So far, 0 people have asked for the money back. So great. I'm glad that I'm of service. And if you do ask for your money back, you can never buy from me again. Because I don't want 0 refunders, but I am happy to give you money back once. So anyway, there's all kinds of videos and information. I'm not going to go through the page. I want to get back to charts, right? We're traders, but if you want to learn how to trade the patterns with me, I urge you to join. It's at trademastery.com gold ticket, and that's the URL, trademastery.com/gold ticket, and that gives you access for the entire rest of the month of November for a paltry $97. So such a deal. I'm going to close that forever. And we get back to the charts. Okay, anyway, the VIX is long overdone. It never, almost never goes down this far. Look historically, the VIX, you will never see it go down like a full month in a row, or very seldom. So it's almost done that so far. So volatility is overdone to the downside, and it's very, very likely. You know, I give like 7-to-1 odds. If I were a Vegas odds maker, I'd lay 7-to-1 on a pivot in the VIX within this upcoming week. Easy 7-to-1. So what that means to you as a trader, what that means to me is our UVXY is now back down near the 52-week low, and that's always a buy. So I'm starting to rebuy shares down here because we're getting near the 52-week low, and the VIX, the ETNs, and ETFs always pivot out 100% of the time, always pivot back up once they take out the 52-week low or test it. So this is a really good time to look for pivots in the UVXY, and I easily see it getting well over 13 in the upcoming couple of weeks. Now we got other charts too. Silver's been up, and one of my traders had mentioned SLV yesterday, and it was a really good swing trading chart. And I'll pull up charts for you guys here in just a minute. As I told that smart trader yesterday, one of my live room members, this is a perfect looking chart for a swing trade because it's not too many points of range. Now, I don't like swing trading things like NEO or other things that are like a $5, or back in the day, a $5 range, or what's up now? Well, any of the anything that has a over $4 or $5 2-day range is a little too extreme because it could gap down at least a couple dollars, and I don't want that. So charts like this, 17.5 to 19.20, it's in a kind of a bunny slope, a nice 2-day 45-degree angle breakout, continuation, gap runner. And so SLV, silver ETF, is a good example of the kind of swing trading chart that my members get from me in the live room. Now let's take a look at some other charts right quick, and then we will blaze on to your guys' picks. Last week we'd covered TBT, and it is starting to bounce. The XTR still looks fantastic up here. If it breaks the 18.5, that's EXTR. Here's NOV, another nice one. What I don't like about that, though, is all the red. I prefer the majority of the most recent week or two of candles be green, telling me we got positive closes. But this is still price actions, everything. We got a doji, so it's uncertain. But if it breaks 24 whole number, we're good to go NOV. Now, pot stocks have been bouncing the last week or so. They've been getting a bit higher. Canopy Growth and Tilray, my two favorites. They did remember that news spike back on the 7th. It crapped out, went down. Now it's back up to retesting those October 7th highs, so to speak. So look at Canopy over 4, etc. Peloton, also one that has been on the move from 7 to almost 10. We covered SLV. Metals are strong lately. So gold, silver, steel, US Steel was strong yesterday. For other pivot plays, notice the pattern. When you have a sustained downtrend and you have a 2-day recovery with green candles, that's often especially on high volume like this one, that's often a good pivot play. So NEO may be a good play, not a recommendation, but I'm just saying it may be a good play if it breaks the 12. Virgin Galactic came all the way down to like 4 or 5 a share. Remember, it used to be so much higher. Anyway, it's been uptrending the last 2 weeks, so keep an eye on SPCE. On strength, Freeport McMoran, copper, and other metals are strong, and it's up near 36. Good for a breakout above that to buy strength. And a really good one is Halliburton. Energy has been strong lately, and Halliburton, one of the oil service providers, is a great chart, right, going 24 to 39. Remember, I don't buy nines. So, and this is I think my last chart, my last swing chart. So I will wait for Halliburton to see if it breaks the 40. But remember, we don't buy 9. So I'm going to skip 39 to 40, but if it breaks 40, we're good to go. Look at some day trading charts. Then I'll cover charts of your choice and we'll be wrapped up early here. Well, on time at least. Gold very strong like silver. GDXU, a spectacular chart. It did a 10-for-1 reverse split last week or week before. So GDXU is 30. SOXL's up there. The silver one we covered. UVXY has been kind of up and down, lately down a bit. Same with SQs, up and down. If we look at the broad market, the spiders, it's a slight long bias, very, very slight, because it's playing around up in the upper area, but there's so much weakness, right? Big legs down, so it's teeter-tottering, trying to slowly establish footing. We will look for guidance from after the election results coming this Tuesday. So Wednesday will be a really spectacular day to trade the markets, right? There'll be a big, huge gap one way or the other come Wednesday morning in the stock market. It would be a really stupid, well, I shouldn't say stupid, because I don't know which direction it'll gap. There'll be a lot of risk involved in holding anything overnight into the election, so I'm not going to do that. I'm going to be mostly cash until Wednesday. Then I'll start placing my bets. And my live room members will be at a clear advantage, because I'll be teaching you and telling you not only what I'm trading, but which charts that you guys think are asking about that are worthy or worthwhile to trade as well. So remember, big ass gap coming the night of the election, so it's probably a smart idea to go cash. I mean, you might want to, for lack of a better word, I'd say gamble, because the market could gap down or up, and that could be for or against you. So I don't like gambling, so I'll be mostly cash the night of the election, but I'll be trading the heck out of the market come Wednesday and Thursday. Okay, and some charts. Let's take a look. Let me go through these right quick. DraftKings never did bounce. I had a 13.7 long call way early in the pre-market. Apple tried to bounce up end of day. Amazon had some relative strength both early in the morning and late in the day, but it sold off up until early afternoon. Meta also in play, climbed up in the afternoon. Of all the big caps sold down that's starting to bounce, I think Meta has a really good chance of moving up. So Facebook, maybe a good play. Peloton's up here, right? It just kind of whiffle-waffled yesterday, but had a really good Thursday. So we'll see if Peloton bicycles up higher over the 10 later. Freeport had a gap and sideways. Halliburton, like I said, had a gap sideways, a gap up. And US Steel also kind of gap up and sideways. And NEO, a gap continuation. These are the kind of charts that I like to cover in the live room with specific alerts for both my members for day and swing trades. All right, let's see if we got some charts here. Oh, wow, I got a bunch of them. Okay. Let's pull up the swing trade chart. Okay, give me your tickers and I will, and I got to scroll back up here. There's so many of them. I'll start with these ones down here at the bottom. And these are not trading recommendations. This is just my own personal take. Hit me with your best charts. I'm only gonna have a minute. Time for a handful here. Let me scroll up because there's a bunch that you guys have posted earlier. Oh wow, there's a bunch. Okay. I gotta scroll up here. Let's see, Rio Apple, okay. Okay, let's see. Rio Apple. What else? AG, BNTX. Anything silver should be okay. Okay. Okay, that's probably enough, guys, at least for now. Thanks. Let me go through these right quick and tell you. Remember, the most deciding, most important factor to determine whether or not something's worth trading is not the trend, it is the range. The trend is also important, but not, that takes second place to the range. So if there's a relatively narrow range, risk reward is really bad. So I don't care if it's trending up or down. I wouldn't trade in the first place because the range is bad, meaning less than 10 or 20% at least. At least I prefer something that's like doubled or got cut in half. You know, a big range, something that's gone like from 6 to 12, we can play, or something that's gone from 12 to 6, we could play. But I don't want something that's gone from 6 to 7 or 7 to 6 kind of thing. MP, that's a horrible chart. Not enough range and no trend. Sark. Short Kathy Woods. Long term, I like it because it's shorting technology. Right now, I don't like it, but if it breaks, so that chart maybe over 68, maybe later 70, but that's like just okay. There's better charts out there. HR Block. That's a absolutely horrible chart. Okay, crappy range and a downtrend. Chipotle, CHPT. That area, no, that's not Chipotle. What is that? Anyway, CHPT, that's a horrible chart. Crappy range and a downtrend. Robinhood. Okay, that's one good one. So finally, you guys have one that's halfway decent. I like Hood. That one's good. That's a good breakout. It's not an extreme range, but it's enough to play with. So that one I like. Hood's good. You got one. Energy ETF. That one's great. Yeah, XLE looks beautiful. That's a rock star chart. 40 Fed to Gringle up. Rio. That is a horrible chart. Why would anyone consider that? Okay, Apple. What a effed up chart that is. Why would anybody in their right mind take a bite out of this thing? Apple sucks. AG. Another entirely sucky chart. Choppy as F. BNTX. Oh, that's awful. It's a downtrend, horrible range. MGM. Fun place to stay in Vegas. Absolutely terrible looking chart. No wonder you guys aren't making money. If you're trading effed up charts like that, how would you in a million years expect to make money with screwed up charts like that? I mean, seriously. Charts like this are good. Charts like that are good. Charts like that are good. So compare and contrast. Less than 10% of the charts that you guys posted are even worth trading in the first place, in my professional estimation. You guys are doomed to fail if you're trading effed up charts. If the range is all over the place, then you don't have directional volatility. If the total range of the instrument is compressed, like all those were, the risk reward is terrible. So your numbers are bad, your chart pattern's bad. The only way you'd make money is by dumb luck or something. Now, we don't want to be dumb luck traders. We want to be professional traders. You got to trade stuff with volatility and volume. If we're looking for pivot plays, we want charts that are trying to take out new highs with some kind of volatility in them. Of all these charts, that one's probably one of the better ones. NEO for a bounce. I like NEO. And I like, let's see, Virgin Galactic is just okay. And so of these charts, if I had to narrow the list, I would, and I'll take a scrub to my own charts too. These are ones that are worth a look, but that's my short list. So what you do is you start off with charts that may be marginal or okay, or they're favorites or whatnot, and then you narrow the list down to a short list of charts that actually have a shot of working. So this is our official watch list for this upcoming week here, guys. TBT looks good, EXTR, NOV. If your charts don't look like these, why would you trade them, right? Because, yeah, you can trade these charts, right? They're public trades. That one actually, it's not that great, so I'm going to fire that one. Neo's good for a bounce. Halliburton, really good for a breakout. Hood's reasonably good. And XLE's a rock star. So now we compress that list of maybe, all told, maybe 30 or 40 picks down to 7, right? Just 7 picks. That's what you want to do as an active trader, right? Is reduce your list, compress it down to 5, 6, 7 at the most. Those are outstanding charts. Those are the best charts I know of in the stock market for directional trends. And yet I'm not going to trade any of them still macro until after the election, because, if people don't like the election results or whatnot, everything could go straight down or whatever. So I'm going to wait till after I get the election results. And these would be the ones, if the market likes the election results, these are the top of mind of ones that at least I'll be trading various share sizes come Wednesday or Thursday, right? So does that make sense? The choppiness charts, you get rid of those and just trade clean, focused, wide range, potentially easy to make money with charts. That's like what I like to focus on. Let's see. No, I don't do options or anything. I like buying the underlying because I like to have instant control over my destiny. Anyway, great job, guys. Thank you so much for being here. Trade charts that look a little something like that, right? 45-degree angle breakout, continuous, clean, tight runs, not a lot of choppy crap, easy to trade, right? Because everyone else is trading in that way. So make life easy on yourself, and I hope to see you guys in the live room. And again, we do cover specific patterns, and I do trade with P&L proof daily, right? Again, this was an unbroken runner pattern. This is basically where you have to move up without major pullbacks. And it's a chart that's inexpensive enough to where you can trade a lot. You know, I was trading over 2,000 shares. It was 2,200. I wasn't over 3,000. I remember that. It was in the low 2,000s, but in over 2,000 shares, I nailed it. That was my biggest profitable trade of the week because it ran up like 60, 70 cents, right? So a nice runner. And identifying these patterns ahead of time. For example, I identified the longs for my traders back down in this region based on what I was seeing in the immediate prior chart pattern. And the way to do that, how to do that, is something that I will teach you in the live room. So I'll tell you what I do, but for the how, you got to pay for it, and it's well worth it. Well, you be the judge. You can try my room, no risk at all, and I will be happy to share with you what I've learned, at least in my own trading experience. So, folks, I hope that helps. Let's get out there and vote and restore some sanity to the country and vote Republican and get out all the Democrats. And I don't care if people are pissed off at that. If you like the current administration, go away, just shoot. Anyway, my point is the markets are going to move strongly after the election, whether it's regardless what happens. You want to be on the right side of your trades. And so one of the things to do to help you with that is to identify patterns that repeat and patterns that are relatively effective. And if you trade size by scaling in gradually, conservatively, I don't know if there's such if anything, I'm a very conservative day trader. My average stop losses are under $50, and I use anywhere from 3 to 5, maybe 8 or 10 cents for the cheaper charts under 20 bucks. And even for things like SOXs, I might use 40 or 60 cents, but it's relatively conservative, tight stops. And I like to trade. I trade often. I trade very conservatively, and I hope that I can teach you a conservative, intelligent approach to day and swing trading for charts that make sense. So I wanted to wish y'all a fond farewell. I wanted to wish you the very best for a relaxing, peaceful weekend. And you guys take care. Oh yeah, here's a good point. Jacob saying, are you worried of trading platforms crashing in a big downward shift? Yes, I am. That's a very, very valid point. Make sure that you only trade with one triggers the other conditional orders, because that automatically, the broker's on the hook for automatically, I don't know if that's correct, but to the best of my ability, well, the best I figure, having one triggers the other orders, it puts the order execution responsibility into the broker's platform. So if your computer crashes, and my computer froze up during the FOMC, would you believe that on Wednesday, it locked up for a few minutes, and I lost some money because I couldn't get out of trades for ones that I just put in. You want to use one triggers the other orders. And I don't know if I have a screen cap here, but basically, I might have one somewhere in here. Anyways, use one triggers the other so that once you get an order fill, I don't see the, well, anyway, I was looking for it. Use one OTO orders, and that way, you put in your buy stop order. So say buy it if it goes up to a certain price, and then you automatically have your trailing stop or hard stop that automatically gets activated once you get an order fill. So it's called one triggers the other, OTO orders. Call your broker and ask about them if you're not familiar, or just Google it. I think I have a video on it somewhere too, but look that up. That's how to protect yourself potentially against volatility. All right, hey, so are you too, man? You're welcome. You have a wonderful and peaceful weekend too. Just limit sells, create safety. No, how to say? No, because it could gap or scale. How to say? It depends on the liquidity of the instrument you're trading, but if it gets halted and then moves, then you may not get filled if it's out of your limit window, but the price may be even further against you. So you got to be very careful in how you manage your order flow. The main thing is don't trade things that get halted, or like these cheap under $5 junk stocks. You want stocks that have a little better volatility and a little more consistency that don't get circuit breaker halted. So don't trade risky, foolish instruments. Like, the worst things to trade in the world are the under $10 low float momentum stocks. People who get busted by the Federal Trade Commission, the bullshit people saying, oh, play the things under $10. No, that's for morons. Professional traders want things, I like the 10 to 40, maybe $50 a share, preferably about 15 to 30 is my bailiwick. Things 15 to 30 a share, and at least 1 million shares a day, or at least 15, 20,000 shares per minute. So we don't want crappy stocks that can be front run by dishonest people in chat rooms. So don't trade anything with light volume. You'll just get screwed because, the guy, the front runner, it's an old boiler trick room. The guy will buy thousands of shares unbeknownst to his members, and then he'll start talking about it like he just found it. And then people will start secretly trying to buy and while he's selling. And so it's a very bad thing. Don't trade things with light volume. That's for stupid people and victims. Make sure that you trade professional grade instruments, at least $10, $15 a share, up to maybe 30, 40 or higher, as long as liquidity and volatility is there. Never trade low float under $10 stocks. You will just blow up your account. Trust me, I've trained tens of thousands of people the last 22 years. I've heard it all. That's where the majority of blowups occur, is people trying to, well, I get good leverage. No, you get screwed. So don't trade stuff. It's like going to the lottery. It's a tax on stupidity. Don't trade cheap stocks. You'll just get into trouble. That's the truth of the matter. You want things like, like all the ones I cover, like these that we cover, right? Like NEO, Halliburton, even the meme stocks like Carnival Cruise Lines or AMC or GameStop or whatever. Liquidity is very important for your safety as a trader. So be sure that you pay attention to that. And other people won't tell you that, but I tell you the truth. So make sure you trade things that are liquid, easy to trade, have consistent patterns, not the pop and drop under $10 crap stocks, and have relatively good strength and patterns like this that once you get a hold of it, you can start feeding it on the way up, buying more shares. And then at the first sign of a trouble or a rollover, 2 or 3 red candles is what I use, or a loss of a whole number, then go to cash or tighten up your trailing stop. All right, you guys, most of my trades I use Fidelity. I've also got accounts with Interactive Brokers and Ameritrade, but I trade with Fidelity because it's free commissions, and I do so many thousands of trades a year. It really adds up. So, and the order execution is really good for the most part. You always get filled within a penny of the inside market. There's hardly any delays ever. It's Fidelity is really good, and their customer service is better than anyone. So, good stuff. All right. I'm going to wrap up. You guys take care. Be safe out there. And I do honestly wish you the best. It's very difficult to trade, and I hope that I've earned your trust a little bit. Try out my live room. It's only like $97. And if you don't like it, I'll give you your money back. So there's zero risk, right? So it's good stuff. Hey, thanks, Jake. I appreciate it, man. So you guys take care. Any other questions for me? If not, I think we're going to wrap. Yeah, I think that's about it. Okay. Well, trade safe out there. Remember, let's treat the election as though it were an FOMC or something. We don't want to put, I'm not going to do any swing trading other than maybe have some UVXY for hedge, but I'm not going to do much swing trading into the election. I'm going to be mostly cash, almost all cash into the election. And after the election, come Wednesday, Thursday, Friday, then we can start trading a little more aggressively once the Wall Street sees what the election results are. There will be a major gap on Wednesday morning. Be sure you join my live room prior to Wednesday morning. You have my word. It'd be very useful. I mean, hopefully I've demonstrated some intelligence and credibility and honesty and all the rest of it. So I do the best I can. Anyway, you guys take care, and I will see you next time. And again, for that offer that I mentioned, the 97, it's at trademastery.com/gold ticket, like Willy Wonka. Trademastery.com/gold ticket. I'll see you there. Take care. Bye for now. Let's make some money. Let's do well. All right. And above all else, have a peaceful, relaxing weekend. Take care Stay safe, and I'll see you in the live room come Monday morning. Bye for now.